Welcome to the Startup Grind.
Let's start off really, let's hear about instead of jumping right into Dragonchain, let's go back to how did you kind of get into the crypto world? What drew you to it? What was the thing that got you involved in it?
Okay.
So 7 years ago-ish?
Right. And I'm serial entrepreneur also, that I created so many companies early, and most of them totally fell flat. A few of them were successful enough that I could pay rent and everything else. So, but that was as a kid. And when I actually got back into the software world, I ended up working for Lockheed, doing work for the feds, FBI, DOD, things like that. And after a while, it got boring. And so I got back into my roots, and I was like, I need to get away from this, and started a firm. And we had some interesting takes because I was very much from the commercial world, and I was dealing with a lot of the public sector. So we ended up creating an R&D group and finding, because we had these contracts, and we would find these little niches that people, our own people would say, there's this thing going on that they're going to need something. And so we would just start working on that, because it's how we kept our people, buzzing, and it was more interesting, because typically it was boring work otherwise. And when then the customer would say, oh, what do you guys know about X? We would already have the answers, and we would, competing against really big firms, that's how we would win work. And one of the things that came in was on the tracking and interesting side, with the finances, the Bitcoin. And it was in 2010. It was extremely early. And
remember what the value was then?
it was around $2. I mean, it was
$2. Okay.
yeah.
So it was more than a couple pennies.
Yeah. So it was still, I mean, it's not early enough.
Yeah.
Still. But and at the time too, it was someone brought it in, and I said, okay, I'll look at it this weekend. And so I read the white paper the Friday night or Saturday morning, and blew me away, right? And so immediately, we went in, and it's the way we conquered everything. It was, whether it was new mobile tech or anything, that we would try to get everyone's minds enrolled in it. So we would find all the senior people on staff and say, okay, for Bitcoin in particular, it was okay. The goal is to buy or mine some, and get them on a wallet local. Not on an exchange, right? I mean, it's and so we dealt with Mt. Gox, and at that time it was quite a process, because you had to create a new account, create an account with Dwala, create an account with Mt. Gox, siphon your money through, hope it got there, because it was still very early and risky and whatever else. And so you buy it and you pull it into your wallet. And so when Mt. Gox failed, it was kind of, it was interesting to me that the people who should know should have never had any amount of, any extraordinary amount of money there, right? It's like the whole point of Bitcoin is that it's decentralized. It's not a bank. I don't need to hold it there. And if I'm trading it, or I'm wanting to catch if I'm a day trader or something, it makes sense. But for anything else, and so our whole point was to basically get it local, and then start using it, and playing with it, getting it in our heads, some of the mechanics, and understand deeply, but then really to understand at a high level, because when you're looking at this stuff, it's very much about if I can understand the capabilities, then I can understand how to apply them, right? And early on, it was and Bitcoin is Bitcoin, and it's very much, it's a currency. It's very financial. It's very focused on one thing, and we started to really look at the non-financial angles on the tech, technology. And so we really started building the stupidest things we could, crazy stuff, anything that came up as maybe we should try this. So we built it, and lots and lots of failure, but that was the point. And with that, we ended up because we were actually integrating, even when some of our customers were like, sure, whatever. I mean, we would throw in the ability to when we were building up their payment processing portion of something for their system that we would include. Oh, we can put Bitcoin or other. I think we did Litecoin. We did a bunch of others, and the thing we were trying to do then was to try to in a scalable, secure way do it, and because of that, we open sourced some things. We got a contract with Coinbase, so that was the first time we actually got paid in Bitcoin, which that was a cool thing for me. It's like that's
cool. Paid
that was neat,
coin.
right? And so then from there, I went to Overstock prior to the T0 or whatever, and with that team went to Symbiont, and then got this offer from Disney, and at first I was like, I didn't want to move at the time, but we decided, move to Seattle, that would be great. We had some family up here, and we were about to have another baby, so makes sense. And the fact that Disney has so many things that they do, right? So many different angles to really think about and work on, and so I took it and very quickly found a group that was already looking at how can we use this right inside, and basically we just expanded the team because once we started saying okay we could do all of these things and started talking to the different groups, we got volunteers like crazy, and we were able to actually build out all types of use cases and hack the system everywhere we could. It's a big company, but it ended up being amazing because we got some just remarkable feedback and vetting of some of the architectures that I'd been working on for years. We were basically, is this real? Is this thing actually useful? Various little bitty esoteric components, and from that we built a platform internal.
And it was open source too, right?
Right. Well, and that took quite because it's a big company, right? But
I was going to say my question was around that. It's like open source is a tough for anyone, and I would think it would be even tougher for Disney because it's Disney. Mm-hmm. Like, where did that come? Like, who decided let's do open source?
They have a group that does it, and they've open sourced some pretty major things from Pixar, and I'm trying to remember all the properties. I'd have to look actually, but a bunch of different projects that make sense. It's like they want for Pixar, it's some rendering standards, I think, so that basically they want the feedback and the definite open source model that we can get input and contribution from outside, which is valuable, and it establishes this as a standard, or at least a de facto standard that other people can use, which helps. And so they had a group that's already doing that, and I've been in that world forever because I was a Linux guy forever, and I early on had a lot of experience with different types of open source licensing, and I maintained a few niche little projects, open source things, and so I was, I'm really good at, odd as it is, I can actually understand the attorneys and the engineers, and so, it's like, I had a role to play there. So I was already working with them, and when we brought up that, some of the angles on our tech on the blockchain side were better leveraged if they are public, right? Entirely internal, it's usable, but when you say it's a hybrid platform and we want to be able to actually checkpoint or hash into Bitcoin and Ethereum, that all of a sudden it becomes a more public thing. So we started talking to them, and they were game, and we went through a very rigorous, serious process. But yeah, I mean, many legal groups, and it was interesting. But when it went out the door, part of the plan was to create a foundation because it went out the door in my name, and I was like, let's put it in, let's wrap it somehow. So it was a nonprofit, and we had intentions for expansion of the tech, and open source is sometimes difficult in scheduling and figuring out how to actually make things happen. So one way or another, we ended up with a commercial, an idea to really expand and scale some of the systems. So
Yeah.
that's what we're doing now.
So now you've got an open source platform that you are building basically your Dragonchain off of, right?
Mhm.
What's a scary thing for you, like in that process? Like it's open source, therefore, I mean, all of us, any of us can play in that world.
Mhm.
What keeps you up at night? You're using that platform to build a company.
That doesn't, the open source side, I'm used to enough. That doesn't worry me at all. It's, some of what we're doing right now is where I'm really kind of like, I don't know how
it's going to come out.
the timing, right? It's all about this timing, so,
Yeah.
But yeah, and then, funding and everything else, those things, that's a normal startup thing, right? So.
Yeah. So tell us, since we're on that subject, like what is the scary thing for you? I mean, you're doing an ICO, which for those of you who don't know, that's initial coin offering, which is a fairly hot topic at this point in time. What's a scary thing for you in that world? Never
The
done
amount
one,
of
so I'm-
press, the number of trolls that are out there, those are the scary things. The money itself isn't scary, and the value isn't. I mean, the team is very serious, and so early on it was some of that. How will we be able to bring over the right people and be able to afford to bring them over, and all the to get the resources in place, and that's a lot of that's falling into place. So I'm less worried about that than I was 3 weeks ago, but everything's moving so fast. That's the other thing too, is just trying to keep a schedule. So without being rude, that's the hard part, right? So.
And let's move forward. Let's say we are now, 6 months from where we are today. You've raised a little bit of money, whether it's $10 million or $5 million or whatever the number is. That's not really important, but you've raised some money. You have enough operating money to do what you want to do. What are you doing 6 months from now? Like, what's the company doing? Like, what's the purpose?
Okay, so we're
6 months
very right. Okay, so we're very, very philosophically driven. That is, everything we're doing on the platform is based upon very clear philosophical points, and so all of the team kind of knows that, which is helpful because if I'm out sick, everybody still kind of knows what to do. It's not on one person, not just me, right? But the main thing, so in 6 months, what I would be doing is focusing on two big key aspects. I should say three, but the platform itself, and getting core built out, getting the scalability in place, getting all of the components that they're already designed, the architecture's there, the design's there. We just have to build them.
That's just basically what you and I would call just engineering work. It's just work, right? It's just development work.
Right. And then the incubator, which is somewhat the same, and it's a little bit. I don't know if it's absolutely unique, but it's something that we're very much wanting to build an incubator that is scaled by the process itself. That is a little bit of automation mixed with a little bit of crowd. That it won't be up to me to pick the winners and losers of the incubator to say, oh, this team deserves some funding. It'll be totally on an open process based on a blockchain where as they progress through certain stages that they will get an internal currency. Well, it's not currency actually, but it's these dragons, these tokens that will allow them to procure what they need for resources, because every project's going to be different. Some of them might make the wrong decisions. That's a test, right? So, right. So they, if they need a new dev, or if they need better marketing, or if they need to hire someone to help them with their white paper, that type of thing, and that's kind of what we want to put in place. And anyone looking from the outside can not necessarily measure it, but they can compare it, or they can see, okay, they're moving along. So my interest level is going up, or I might choose to interact with them, or maybe use their system or something else. And the point being that way, the good projects that have the active adoption and or the extremely active teams will progress faster, and it won't be something that we have to worry, oh, we have 100 projects, right? It's like that,
Yeah.
that won't matter.
That won't
It's all
matter,
going to be an ecosystem thing.
So one of the things that I'm hearing then is you're obviously going to be looking for interesting either ideas or, or people that can actually execute ideas, it sounds like as well.
Right.
So that's going to be something you guys are going to be seeking in those
Yes.
interesting
yes.
ideas.
Yes.
And,
And even ideas that, it's funny, before Disney, during Disney, I mean, I'd say at Disney, I could say quite a bit. We would get people that would come to the team and say, I have this idea, and I don't know if it's crazy, right? That does this make sense with these capabilities? That they, from the surface, had at least the notion that it maybe fit. And a lot of those were things that we would never have thought of,
Sure.
that were just remarkable ways to model these little economies. And sometimes they were currency related, sometimes they weren't. Oftentimes a lot of what we were working on had no surface fintech aspect. They were all, if you went down into them, you say, oh, there is some, some economy here, but a lot of times there weren't. It was about transparency or about tracking things or things like that.
So Joe, talk to us about like the like Bitcoin's Bitcoin. Most people kind of know that as the thing that maybe they think that is blockchain, but it's not. I mean, it's a blockchain is different than Bitcoin. So tell us like what if talking in layman's terms.
Okay.
Right? Like, what is Bitcoin? Like, what is that people talk about? Explain it for the layman that kind of these pieces and parts to the blockchain industry.
Okay.
Start at the bottom. Okay, start like basis. Blockchain is the basis.
Right. Okay, so do you want the technical side, or do you want to know
Want,
more of the philosophical
the
side?
average person like me can actually understand.
Okay. So basically, and I'll go like the mechanical and then what it really means, but that all of the components of Bitcoin existed prior to Bitcoin. So it was not like say, a brand new thing. But at the same time, I still think Satoshi, whoever he or she or it is or was, is genius of our age. I mean, I think way above what a lot of other. Anyway, I mean, historically significant work, and not because these things were brand new, but because the way they were assembled is remarkable, and that one way or another, it's a way to tune humans to do something. And potentially you could do that with machines. It's a way to make software incentivize human activity. So and it's definite and absolute and demonstratable that do you look at the hash power that has been it's the far, I don't even know the orders of magnitude, but far and away the most powerful computing concern on Earth, right? And it's because he's tuned, it is a pure honesty of a market that there's money, and if you do this, you can get money. And it started very slow. Yes, yet I mean the mechanics are you assemble a block, you put transactions in a block. So the transactions are the utility that I can move a value from my balance to your balance by signing it in a provable way. And after you have a proof of work in there, which is, again, was not invented for this, it existed prior, but it is basically I'm going to hash all of these values, including a random element, until I hit a certain threshold of a low enough result on this hash power, right? It's a very mechanical problem, but then I have a block which is solved, and everyone can very quick. It might have taken me 1 trillion hashes. It might have taken me 20 grand to run of power to build that block, but in a single hash you can verify it, right? And that already existed too, but now I'm going to put that block out there, and it has the hash to the prior block. So we have this chain assembled so that the older my block is, the more expensive it would be to fake it, to change it. I would have to go back in time and you know, rehash all those blocks through, which after a certain point in time, it's, you know,
Relatively impossible.
yeah. So, but in the end, I mean, the real meaning, the real value in it is that you can put an algorithm in there. In this case, it is that one thing for this currency. But when you're talking about blockchain, you can put other things in there and incentivize people or groups or devices to do certain things, right?
So describe then like smart contracts. That's a pretty basic concept. Like
Right.
describe what a smart contract is and how it lives on blockchain.
Okay, so smart contract would be a contract in code that is deterministic, or at least deterministic as can be, that we could create a smart contract, and potentially, depending on the ruling, it might be the whole community, it might be just two people, whatever it is, that they can both sign it, they can both agree to it, to the results of the smart contract at any point in time, or the contract itself might have time values in it. Say, you know, as long as we run this before next Friday, you know, we could both calculate the results ahead of time, and then, you know, at some point, depending on, you know, whatever some external value is, I might run it because I get what I want out of it.
Sure.
And the interesting thing to me about that was that you could basically encode entire legal contracts into a smart. Now, you know, I think this will happen. A lot of people do, but that we could get rid of lawyers, right? And this alone.
Are there any lawyers in the room? No lawyers in the room. That's good.
So anyway, no, but that's the thing. It's like, you know, one way or another, you have a deterministic way. So, and a lot of what we're doing even with Dragonchain is to say, how do we get rid of those gray areas? Because so many times, like, we don't know. You know, we think this is legal. I'm doing what's legal, but someone might sue me, or the state might come after me or something.
Sure.
And it's so up in the air. I mean, it depends if you get a bad judge. It depends if you get a bad lawyer to represent you. You know, there's no way around it. With this, you can, you know, if we all agree to this and it's legal, like say in what we talked about in Delaware, where you know that you basically could say this is a legally binding smart contract that if it results in a green checkbox, then I'm good. I didn't break the law, and even if someone made a mistake, I can still point to that and say, well, as of that time, I didn't break the law. You know, if you change something after the fact, that's different. I'm good. Yeah. That gets a lot more. I think especially for business, that frees up a lot of potential because you know, you don't have all of these risks, and you can calculate your risk ahead of time. Some of the things we're doing with Dragonchain that are a little bit at first hard to describe, but relate to the fact that as a business, I might have a contractual relationship with you. You might even be inside of my organization. So I can basically trust your data. So I'm going to accept it without any extra validation. But we might have a third party that's outside the company that we have a contractual relationship with. So we want validation, but that's all we need. We don't need anything higher than that. Whereas, say there's some party that is in another nation state that we have no contractual relationship with, it would be very hard, you know, depending on what state they're in, to enforce certain things. That we can actually wait until we have a certain amount of hash power. Once it's in our system where it gets up into Bitcoin, as an example, that we could potentially wait until a certain amount of hash power has been applied to the transaction that is proven to be in Bitcoin, to a point where, you know, maybe it's an order of magnitude more than the value of the transaction. So I could say it would cost you, say it's a $30,000 transaction, and I might programmatically in my system say I'm not going to accept it until it would take at least $250,000 worth of power, applied hash power, to get a 2% chance of faking the data. And I can actually control that and say, okay, I'm not going to accept it till then. Now, that type of thing.
Yeah. Now I know it's validated.
It's just a way to.
So it's just levels of validation.
Right.
Right.
Yeah.
And so in your kind of in your head, where do you think, like, where are going to be the biggest disruptions in your opinion, over the next? It's going to take obviously a while. I mean, you might know this, I don't know this, but what percent? Like, if you looked at the 330 million people in the U.S., what percent would actually use or even probably be exposed to blockchain today? What percent is it? Is it
Today, yeah, less than 1%.
Less than 1%.
I'm sure.
But it's
I'm
small.
sure. Yeah.
It's small. Okay.
Very early.
Yeah, very early. So, what do you think 5 years from now?
I would think there's going to be a lot of under the radar, things that are using it that you don't know are using it. I mean, some of the banks are getting in there that they will have stuff, that you don't know is behind the scenes.
For security reasons.
Right. And there are already some applications that are very much under the radar that are being used, but you don't know. And it's just a system on top that's using it. And philosophically, I try to stay away from. We would a lot of times get asked as a team which use cases or which classes of use case should not consider blockchain, and it was totally the wrong question because it's early internet. If you asked which websites should I not build, right? Sure. It's like that's the wrong question. It's that you want to make a platform, ideally, that is easy to develop on, that ideally is low risk to develop on, and that makes it easy so that I might have some totally crazy idea that you don't get, nobody else gets, but someone somewhere does, sure. And it works, right? And that happens all the time, yeah. And that will happen with blockchain. That
was Pinterest, that was Twitter, that was
yeah.
All those, right?
Yes.
Yeah.
Twitter. Yep.
Where do you think, like, what's the scary thing for the industry in your opinion? Like, what's things like you would hate to see happen?
There's some, some of the
detrimental. Like, we don't care what Jamie Dimon says.
Here's the
I
thing.
don't care that he thinks that we're whatever he said, that traders are stupid or whatever. But
that is indicator number one.
Well,
whenever you have anything like that,
because that's saying
you know it.
Yeah, you know
when China bans it, you need to buy it because the people who dump it when China bans it, the whole reason that it exists, the number one reason that Bitcoin is there, is because China can't ban math. You might be able to do stuff with the network, but you can't stop it ever, right? And that's the thing. And there are some things where I won't go too far into it because the political stuff, but the asymmetric attacks, there are ways to attack some of these, and mostly it's the same as any other security system. The best attack is a human. It isn't the system itself. It's you. If you attack the humans around the system, you potentially could cause trouble.
Sure.
But I still think there's enough reward and upside that, and I don't, in the end, nobody knows, is Bitcoin going to last?
Yeah, we still don't know that.
Right.
We've all believed,
but
some of us believe
something will, and if it fails because of a human attack, definitely. I mean, it's already out the gate. There's no way. I mean, it's like, there are already better versions of Bitcoin, like Monero, Dash. I mean, for the privacy side and for the traceability, it's like there are already better versions. They don't have the network effect yet, but it's still. So yeah, there's no stopping it. And if you look up the Bitcoin obituaries, you'll see. I mean, it's been called out hundreds of times that it's dead. Not coming back, and all the way from when it was in the single-digit dollars up till now.
It was 150.
Oh yeah, and it's beautiful when a big bank like that says something as ridiculous as that. It's just it's hilarious. So
it's a good sign. It's a good sign. It's a harbinger for something.
Yeah. And we're it's funny because we as a team we're big Bitcoin believers, and we're very diverse in thought. That I mean how many people own altcoins? Here.
Does anyone have any?
And how many own 5 or more different altcoins? Okay, and 10. Okay, so I mean, it's like I don't even know how many. I dabble like crazy. It's like, oh my gosh, that's
that's cool.
This is and so and it's like it might be tiny bit of money, but it's still what's a tiny bit today is not,
Maybe
you know,
not.
so later. But anyway, it's the fact that some of them, you know, especially on fundamentals, if you go in there and you say, okay, this is, and you could consider it somewhat like a website in the 90s where you say, okay, oh, they're going to sell books. Okay, there's a market for that. You know, and when you look at some of these cryptos, some of them, the modeling maybe isn't all there, or you know, there might be, you know, a lot of times it depends on the team, big time,
Sure.
just like any startup. But some of them are going to be very important, right? And the fact that they have, not only have network effect, not only do you have the use case and, like, say, the interface, but you have this built-in ability to actually incentivize certain activities, right? So there's some super interesting stuff around that.
So, what do you think? I mean, there's, like you say, there's many coins out there. What are, you mentioned a couple, Dash, you already mentioned, which is cool. What are some other ones that you think interesting? Might have some.
I like to think of them as, like, say you look at them as classes. You have the currency classes where you have the Monero, you have Dash, you have Bitcoin, Litecoin. Then you have more of the platforms like Ethereum, Waves, trying to think.
Dragonchain.
Yeah, Dragonchain, right. So, but yeah, it's then you have some that are very specific, like, say, the Vibrate that, you know, just came out. You have it's an interesting thing because you have some that are, you know, very specifically honed in, and some that are more generic. And so, yeah, I mean, I don't want to shill any of them, right? But there's just tons of good stuff out there and value. And, you know, if you're not playing with your rent, it's,
Sure,
you
it's
know,
okay.
it's all good. So.
Okay. And where is the like, if you're an entrepreneur, where are the opportunities that you can do some interesting things? Like, where do you see, you know, where are the opportunities? Where do you think? I mean, from Joe's perspective, where are some opportunities that would be like, Mike, if I was looking around, here's some things I would look at. Right?
I would say, and a lot of it is positioning. Like, say, if you, it's still extremely early, and that's not just on the price side. It's on the actual skill side and on the philosophically, the decentralization of everything is going to be huge. I mean, I worked on a project where it was in it, you know, it was. I probably can't go into that public. Sorry, but it was one way or another that it was all a centralized system, and I had to talk to the people. I was like, you know, in 5 years, what we did today won't be possible because it won't be in one place. It won't be controlled by one entity, and so it's an entirely different way to look at things. And you know, I'm very much I'm not religious about it. That I don't think everything needs to be completely decentralized, because if you have certain data that is sensitive, you can't, in my opinion,
Sure.
you can't in a real system put it out there in the hopes that even if you obfuscate it, that someone isn't going to figure it out. You can't put a smart contract out there without expecting someone to attack it,
Sure.
Especially if there's money behind it. If you're holding funds and holding sensitive data and you put your smart contract out there,
It's going to get.
yeah, and that is the big architectural difficulty with blockchain, and that's what, you know, spurred us. So the opportunities, I mean, I think are really to consider those and to consider them at a high level philosophically, but then to also like, say, take what you know if you're already in an industry, to take that and figure out, okay, what are the things that no one in blockchain understands about this industry, where there's some niche, something that is needed,
Yeah.
and a lot of what we do are, you know, we take people will come in with these ideas or these questions, and we'll talk to them about the actual utility that can be tokenized, right? So it's not just a bolt-on, oh, we're going to put a currency up here so we can raise money. That's, you know, that's not, I don't know, I'm not going to say it's a bad model, but it's not the best model. But if you can actually identify the utility and tokenize it and then model, you know, the economy, then you have something, because you can, you know, incentivize whoever the customers are to do what you want them to do. Yeah. Hopefully it's a good thing. And so it's an interesting angle too, because that is somewhat difficult, right? That if you're already building if you're building a startup and you're building software, as an example, you already know it's hard. It's hard to do it right. It's hard to do it successfully without a lot of failure. And it's definitely, especially if you're dealing with a blockchain, you can't very easily go back in time, right? It's like once you've set it out, it's there. And so what our model, Dragonchain, again, does is it tries to make that as late binding as possible. That is, you can start with a system that is, yes, you could use a database and Apache to do the same thing. But the point isn't that, we're just going to do this on a blockchain. It is that it gives you the capability to then see how your data is being used, to model it, to try different things in isolation, and then start monetizing. You either monetize assets or you monetize events, and at some point you have a real economy that can be driven, and we've seen it work. So it's crazy interesting.
So, guys, if you have some questions, feel free to start thinking of questions. So, where do you think, for Dragonchain, like your thing, right, your company, like where's the thing that you think will put you on the map? What's the thing that will put you on the map? And I say put you on the map. I'm not saying eBay on the map or Twitter on the map. I'm saying like what will put you on the map for like being like going in the right direction, having solid foundation, having a good business model. What happenings will kind of in your head, again, you're the CEO, what would things like say make you feel like, okay, we've gotten something started here, this feels pretty good? What's that thing?
I think it's the scaling of what we've already seen, which we put it out of the open source. It was a very slow start. When we open sourced it, Disney didn't let us do any press releases. Everything was organic. We couldn't even communicate. It was it was an interesting thing because people were saying
stuff,
interesting things on the outside, and I was like, oh, that's funny. But sometimes they were saying what we were saying internally, So it was a beautiful thing. But because of that, and because I was actually maintaining the open source, and I was able to talk to people as they came in, we got enough projects that came in that some of which were guarded, right? Some of which were asking us questions, and we would know who they are. So, you're like, oh, are you doing this? We can't say, right? But then others were very open and actually we got very deep into it, and most of them were coming to us because they'd already tried one of the other platforms, and because, again, of those, I think, architectural, structural issues, they couldn't actually do what they intended to do, what they knew should be possible based upon the capabilities, at least that they had read at a high level. Some of them were technical people, some of them weren't, but because, like say we abstracted the proof, so you don't have to have proof of work because you get that at a higher level in our consensus model. You can still get the security from Bitcoin. You don't have to necessarily, you're still paying for it in fees, but you don't need to run a bunch of mining servers in your own data center. We abstracted the currency, so you can have multiple currencies on one chain. You can have no currency on the chain. Yeah. It's, you can treat it like it's just a transactional system that happens to be a blockchain if you want. And it left it very, people, I think are attracted to that flexibility because it's already scary. And they already see, the weekly attacks that happen on various networks, and and you think about the range of things that happen, both technical and social attacks, and it's astounding, and it's because there's a lot of money there, right? So, and that scares people, right? So when you tell them, okay, well, you can treat this like an internal web service, you can put your traditional web service devs on it, and they will understand it. And particularly when we're launching a commercial platform where you can build it into Java, Python, C# or Node, it all of a sudden becomes, okay, I already know I'm a Python guy, so I can go in there and I can code this up, and I have access to AWS components, and yet, so it's a very traditional model there, but I don't have to worry about some of the decentralized computing issues, right? So it just makes it simpler for a business person to formulate what they want to build and actually make it happen. So that's kind of, I think that is the main thing that would put us on there, because adoption is kind of.
That's really what you're,
Yeah.
You need
Yeah.
adoption.
Yeah.
You need people using the platform.
Yeah.
Any questions? In the back.
So related to the subject, you used the word incentivizing behavior quite a bit. Can you give a concrete example of that?
Sure.
The question is,
And
can you explain, incentivize human behaviors? Because we've talked about that a few times.
Right, and I'll do it like, say, a concrete example and then more of a high level, because the high level one is interesting to me. My name tag dropped.
Right.
The concrete example would be a use case at a particular company, I can't say which, that we would have, like, say, engineering groups. And the engineering groups, one of them was servicing these other engineering groups, and they didn't have visibility into what was going on, and they would constantly hit problems where something wasn't delivered, or it was delivered 3 times because they, didn't do what they should be doing, and they just wanted visibility. And try to talk to them about currency, and they're like, currency scared them, right? But then, after about a month and a half, they came back. It's like, we want currency. We have to answer a couple of questions, but we think we want it, because it became something where, with Dragonchain, that they could have the actual data there. They could actually see and identify, okay, this party or this group is not necessarily, they're not doing what we want. They're not evil, nothing else, but they're keeping us from being efficient, right? Keeping me from meeting my deadlines for my boss, everything else. This group over here is bright and shining example of what we want, right? So you basically run the modeling, you figure out what activities or assets are involved with the good group versus the bad group. You model it, you monetize the good. You basically make it so the bad is still functioning. They aren't going to go crying to your boss, but they're waiting in line. They see that the other group gets up there anything they want, right? Because they have the monetary power to do it. They have that currency. And that's amazing, because it changes the minds. And that's even at an engineering level. And what it turns out that typically those groups are running on an entirely political economy, right? So it's all political currency. I know your boss and I want this today, right? I play golf with your boss. I want this today. It's that type of thing which leads to turnover, because these engineers are like, forget this. I'm going to go to either a different group, or I'm going to leave this company, because I don't want to deal with this stuff on a Saturday night, right? Yeah. And so what this does, it makes it all transparent. So everybody can show, look, I'm very effective, and it went way beyond that, because then you tie it into contributions to the code, contributions to docs, contributions to presentations or training or anything else. And kind of our goal was to make it theoretically so that the engineers could potentially outbid their boss for work, to say, you know what, I want to work on that project, and I'm going to take what I have here, and I'm going to bid my time over there. And that type of thing is possible. And then you end up with this total flip side of, instead of doing a top-down funding, you can have the bottom-up without having to do the Google Friday thing. I mean, it's much more organic, natural. Yeah. So that's the concrete side. The more philosophical side is, and I said this at the last meetup, so hopefully if anyone's there, it's a little redundant, but that I always consider it like, say, if you consider cattle or corn, right? And humans have bred cattle and corn to be, to either taste good or to be valuable for something, right? And that some people consider we've enslaved the cattle, right? So, if you were an alien, you came down, it's like, what is this other species, whatever. That, but if you look at it on the flip side, this particular strain of corn or this particular breed of cattle are actually enslaving us, because they are genetically maximized that they would never produce, that corn would never produce to the level that it does without humans, right? And the only reason that we're doing that is because it's tuned to that. And so I think, basically that's somewhat the kernel of the, what's actually happening with Bitcoin, and that basically it is software which has enslaved humans to spend money to hash and to create these Bitcoins. And that's, it depends on how you look at it, but that's really what it is. And if you think about it that way, you can say, okay, for any given activity, I can do that. And it might be a while before I can figure it out, and it's not always an easy question, but that's what we're talking about, where you can make anything happen. Things that are crazy. Because if you even told me back in 2010 that hash power would be at the level that it is, and that the price would be at the level that it is, I would have bought a lot more. First of all, but
you wouldn't have believed it.
Right. I mean, it's like it's really remarkable, and it's the crazy thing is it's not even a supported system. It wasn't something that the bankers were all gunning for. It wasn't something that the politicians were gunning for. I mean, we actually had to lobby politicians to please quiet down about making it illegal, right? Because it was really bad for the U.S. and for so so back then that was a lot of it. It's like, guys, this is a multi-trillion-dollar opportunity. Don't mess it up. This is like the internet. It's like you wouldn't go in and in the early 90s and say, we need to make the internet illegal because people are buying drugs, people are buying nefarious things, or so it's that anyway.
Go ahead.
So I have a question because I'm actually thinking of doing similar things about this example you described. However, for public chains, I mean, there are benefits. Some people know it and it's difficult to hack. So you were describing, I guess, it's more of a private chain of the company scenario again. I mean, why do I have to go through the blockchain tunnel instead of I just have a company database that people can just take a look? Why do you have to use blockchain?
It's a hybrid. Sorry, it's a hybrid chain. So it's at one level it is private, and you can keep it entirely private. But the point is that you obtain the security at the higher levels of consensus. And I think there's value in both. Like I said, I'm not a religious. I think it's a spectrum. It is, there are. If you ask me, Hyperledger versus Bitcoin, right? The security's there, the network's there, the value's there. But that said, Bitcoin, you wouldn't build certain systems on Bitcoin, right? And so it's more of a flexibility thing, and an architectural choice. It is very much that if you look at it today and you go to certain people who are very interested in building on blockchain, there are certain things they can't do. If you have a company that manages retirement accounts, right? Would you build that on Ethereum, right? No, right? That would be absolutely not. So what we're trying to do is to be that bridge that allows me to build something that is functional at the lowest level, and that I'm able to separate, structurally separate, and yet still gain the hash power of Bitcoin or Ethereum or other, and also being able to tie into staking systems as well. That's the whole point. It's a spectrum. So there are certain things that make sense at a private level, and yes, you could build. I could here's a database and here's Apache. I'm a Postgres guy, right? And so I could build something and checkpoint into Bitcoin and get some of that same value, but at the same time, I'm missing out on all the potential standards and the ability to have local currency without building everything myself, and things like that. So
that network effect.
Yeah.
Right here.
Can you talk about your ICO? I'm a bit new to it, and let's say you're pitching to, I don't know how it works. Are you pitching to investors?
That's actually a good question.
Look like?
Explain an ICO and and again in layman's terms, what is it?
Okay. So there's actually some really interesting things around that. So I tend to say token sale because I hate the potential for people comparing with IPO and equity and everything else. So
Is this security? Or
No.
ours is not, right? So that's a very important point too. That I think the beauty of that model is that, and that's largely the reason that I joined that Overstock team, is because they were wanting to build, I guess, some of the capabilities of raising funds for startups, and more complex than that. That's at least the simple form of the explanation, that the ability to raise funds for startups in a decentralized way that wouldn't be focused entirely in the U.S., where all of the rules around accredited investors and all of the rules are protecting the public, which I don't believe in. Philosophically, I don't need protection from the government. In fact, that's one thing I do not want, and that it frees it up because I had raised money before for startups, and it's not easy, and it's not easy even without the rules.
Yeah, exactly.
And if you're able to say, look, I have a simple idea that people could understand, I could put it up on on a web page, and a cab driver somewhere in Asia could actually contribute a day's wages to it. That would be remarkable, because I would rather have 1 million of those than 5 whales, accredited investors in the U.S., right? And for many reasons, right? But right. And the interesting thing then is, you look at it. So the argument that we have to protect, it is Wild West, right? And there are some scams out there, but generally it's pretty well self-governed so far. I mean, the people that I know in the space that have invested in the early, not even the established blockchain projects, but in even early ICO, there've been very few. At least for the people that are in there. I mean, for a newbie to come in, yes, you have to be very careful. But
for the people that know the system.
But the people know it's pretty easy to pick out not the winners or losers, but to pick out the scams, right? It's relatively easy because you can look at the team, you can look at the white paper, you can look at what they're actually doing, and you can say that model doesn't actually. There's some that aren't scams where the model's just bad too, right? Where it's like, okay, those are the ones that are easy to kind of rule out. But the beauty of them is that decentralization on one hand. So it's very much a democratization of fundraising, but the fact that it's not equity. So a lot of those headaches that you have when you're starting a company are not really there. I mean, they are there because the lawyers will still get on your case and you still have to mark stuff out, but it's not the headache where people are worried about dilution and things that are going to happen because you have these tokens. And that
token, just to explain that token is something that gives you, like, the token is what? Like, I have
ideally, it will be a utility,
Yeah.
A tokenized utility. Yeah. It's to say that with this, with these keys that you possess in your wallet, holding this token or tokens, you can do these things on this system.
Yeah.
That's generally what it is. So
it can create value with these tokens.
right,
Yeah.
and you can hold them.
It may not be monetary value.
There might be some speculative nature where you might not, maybe you won't use that system, but other people will. So we're like, I'm going to buy it, or maybe you want to support the team because you want to see it mature. But the beauty is that the team then can decentralize that funding, which radically opens up more money because you don't have to worry about the. It's not like say if you go to accredited investors in a very small pool. I mean, it's so hard to do that. All of a sudden, you're opening up to anybody. On top of the fact that the investors have a leg up, in my opinion, because they have near immediate liquidity, at least when compared to equity. It's like if I put in $100,000 into your startup, I don't have to wait the 5, 10, however many years for you to exit and for me to actually benefit from that. That I can actually say, okay, I'm going to put this money in, I'm going to take it out, I might sell my basis as it goes up and then hold it, and that's an amazing thing because it's just the liquidity is there.
Yeah, flexibility for the investor.
Yeah, and there are with token sales there are a lot of different models, of course, and it's really interesting. There are a lot of different games. I say gaming, I should say.
Yeah.
So.
Is that good enough?
Well, can I have a follow-on question? So how are you going to use the tokens? Let's say if I participate in the ICO, the token sale, and does it give me the right to use some of your feature of the platform or to vote in the incubator?
So the question is, if for instance I was going to participate and get tokens from Dragonchain, what do I get for that?
Right, right. So the utility, the primary utility, and there's a range of them, but the primary utility on the platform side is access to what are web services in the end. But it's like if I want to spin up a node, or I want to provision a certain smart contract, or I want to provision a certain currency, that I have to have Dragons to do that, right? And those things are in particular, driven towards that. On the incubator side, it is access to the interfaces, so the dashboard, so I can see what projects are there. On each project, access to their early offerings. So it's a way for the projects themselves to kind of potentially monetize, but at least control beta offerings. So I don't want the entire world coming in, so I'm going to limit it to this, and here's how you get in, and you have to have Dragons to do that. And it's a way for either a user, and it might be programmatic. I might say, you have a system that is gold to me because I need to integrate that capability to my system, so I'm going to work with you early to integrate your APIs, things like that. And it's also a way for you to potentially do what would be the equivalent of a seed funding, where you can offer to people who really understand your project this early. You want to raise a couple $100,000. It's a very simple way to do it, and that would be some of that mechanism. The other angle on it is that these incubated projects, as they are in place there, they'll go through this process. So they'll into further and further maturity, and we're, like I said before, we're going to automate that as much as possible. But the crowd will come in after the fact, so they will get those Dragons, and they can actually use the Dragons for what they need, and if they choose wisely, they'll move forward, and it keeps going on. So, and there are a lot of other interactions, but it's an ecosystem where we're working with all these different partners and trying to line them all up and get everyone signed and all that right now. So,
Go ahead.
So with the token sales, with the whole utility aspect, how is that different from Kickstarter?
Well, with Kickstarter, and I will tell you, should I say negative things about? It's like, it was, especially when it came out, I was very hopeful. But you can get a T-shirt, right? It's like, oh, I'm going to contribute. I might get something, but I get a T-shirt, right?
What do you decide? Like, as the person watching the campaign, it could be a T-shirt inside of an app or something that would otherwise be premium. So it sounds similar, kind of what you're offering.
Well, yeah, very much. But it would be, I guess, the differentiator would be the blockchain platform, along with the potential for currency. So it would be equivalent of saying you have a project on Kickstarter that you are going to have your own currency. So you're going to build a system with a currency. I can contribute, but instead of just getting, hopefully waiting for you to actually ship the product, that I'm getting these tokens that I can actually use in your system. And on top of the fact, the things that we haven't really gotten into yet because it's already complex enough, but you imagine if, Kickstarter is a great example, you imagine if we had the capability to say, I am an investor, but I don't know you, right? You might not even live in the same country as me, but I want to buy what you're offering. So I'm going to put the money in there, right? And how often does it happen? You never deliver, right? Happens all the time. You might deliver late, you never deliver. What we can do with blockchain is put in gates where we can say, and the gates could either be automated. There's a little bit, it's kind of hard to automate something like that, but they could also be community controlled, where all of the investors can say, okay, you met that, we're going to release those funds, right? Okay, you met this, you're going to release the funds. And it can all be agreed to in advance with unit tests or something depending on the system. But there are ways to do that. It could be very human, where we might not be able to automate the testing to know you passed some milestone. But the beauty there is that we can actually control that. And potentially, say you don't deliver, that all the investors could just withdraw all the funds, so that type of thing. And it's much safer then, so you're more likely to gain me as an investor because I don't have to worry about the risk, right?
So what if I raise $500,000, it doesn't work out, I lose $500,000, and then all those investors want their money back, am I $500,000 in debt then?
No, it would just be returned. It's like, say you made your first milestone, so you got 50 grand, right? So you're happy, you made your first milestone. Then you decide, you know what, this is boring. I'm going to do something else, right? You still have the rest of that money sitting there, right? Especially with Kickstarter. So you're just going to run off with it. With this, it could be sitting in an escrow of some type. It could be a blockchain escrow. It could be a handled by some So one way or another, however that would be modeled, that it would be all of the investors would have the ability to say they are not delivering as promised, and maybe after 2 periods of time there would be some automated, okay, all funds returned.
So they get to keep the 50.
Right,
50's
you've already
gone.
spent the 50. That's the risk, but you did deliver what you promised for that first milestone, so that was what was agreed to, and that's the smart contract. That's some of the things you can do, and it goes way beyond that. You could do tons more, but it's pretty cool.
All the way back.
Want to talk, as I read up on the subject, and I'd like to maybe report on you as well, around the potential for blockchain to better protect data. We've had a mass attack. Governments and countries and regions are responding with ever more onerous data privacy security laws. Can you talk a little bit about the practical implications for better protecting data as opposed to spinning up S3 buckets with encryption technology? How did these two compare? What was the benefit to blockchain?
So basically, he's saying, how does blockchain help keep, like for instance, the Equifax data breach that they just had? How can it help in kind of normal data protection? Is that what it is?
How is blockchain more secure
Yeah.
than the current alternative?
Exactly. How's it more secure or
Yes.
not?
Yeah, it depends on how it's built, of course, right? I mean, you could build an application of blockchain that did credit that was just as bad as Equifax. It'd be hard, and it would never be as evil, but
It could be done.
it could be done. But the thing you could do though is not just decentralize it on the blockchain, but actually potentially allow people to hold their own data and to provide what subsets of data they're comfortable with to a certain group to verify identity or whatever they need to verify. Anything from if I controlled all of my own data and the hashes or the proof of that was on the blockchain, that I could go in, something as simple as a website where they would potentially have a scoring algorithm that says, here are the rules. It's kind of like an I-9 form. If you've ever done that in a company where you have to either give a passport or you have to give a driver's license and something else, right? It gives you some choice there. Something like that, but where it would be scored. So it could say, okay, we need either your home address or your social or some combination of other factors, right? And you can say, you know what, I'm not giving you my social security number, but I'll give you my home address, and I'll give you, and it's signed by these banks, and it's signed by the state of Washington, as an example, right? And that might pass the score enough for that entity to say, okay, you're really Joe, we believe you, here's your account, everything else. And I've only exposed a limited amount of things, and yes, they might hold it, but at least I know that I've exposed it, and there might be some legal relationship that they, if they are holding it when they're not supposed to be holding it, then they're liable, something like that. But either way, it's a way to control it. And same with health data, finance data, personal identifiable. So the best thing in that case is that an entity like Equifax or the Office of Personnel Management for the U.S. government should never hold the information they're holding, because they are not capable of protecting it. Obviously, right? It's not a driver. It's like, you have government employees or you have people who are working for Equifax. They really don't care. They're already abusing your data, right? They don't really care enough to really protect it like they should. So they should never actually hold it, right? And if it were possible,
To just give
with
them
blockchain.
access instead
Yeah.
of having it.
Well, yeah, and you say give them access at that point, and they sign off with proof that I provided it, so they can prove that I proved it to them at that point in time, even though they don't hold it. So they're following all the rules, and that's generally the high level. There are a lot of things around that. you can do, but that hasn't been built yet.
Exactly. Last question. Go ahead. I'll get two more because there's two. Go ahead and back. I'll get you next. Go ahead, Emery.
So I'm trying to think of a real world model for what this ICO is and Dragonchain. And I'm just wondering if, say for example, OfferUp, if I invested in OfferUp, and then I would get in return like OfferUp coins where I could only use on to purchase from their store, or can I use these tokens to purchase from Craigslist and eBay as well? And then what happens when Dragonchain increases in value and my tokens are worth, my one is worth two, but I don't want to spend all of my token at this store if that's the way it is, and I trade it for Bitcoin or some other sort of option.
So he's basically saying, what do I, if I get these coins, what do I get? Like, what can I do with them? Do I have to stay within the marketplace? As in, if OfferUp, we have to stay within the OfferUp marketplace, or can we go exterior? What else can I do with those once they either gain value or lose value?
Right. And that's an adoption question. Like, say with Bitcoin, right? Where can you spend your Bitcoin? You can spend it at Expedia, Dell,
Most places, or not
Xbox,
most, lots of
right? Some of that's changed, right? But either way, it's a matter of the exchanges. You go to an exchange, and with Bitcoin or Ethereum, you can trade them for dollars. You can trade them for U.S. dollar tokens, even Tether, which is another cryptocurrency. But most altcoins, if they're established enough, get listed on an exchange, and so you can buy them or sell them for Bitcoin typically, sometimes Ethereum, depending on the exchange and the pairing. So that's the generic side. But in our case, yeah, it's a single marketplace that you would typically use Bitcoin or Ethereum to buy dragons, and then you'd come into our marketplace with the dragons and do things. And if you actually did whatever the work was, like you build a system that gains more dragons, or maybe you're a vendor. So maybe you're a crypto analyst and you're going to help some people with their white papers or with evaluating certain technical aspects of their project. You gain some dragons, and yeah, you would take those dragons and convert them to Bitcoin or to cash, to pay the bills. That, depending on where you live, right?
Sure.
So.
Last question.
Since tokenized companies are not securities, can Dragonchain or tokenized companies be taken over, bought, or sold, and what happens to the token holders?
Okay. Largely unknown. Like, say, I don't know if there have been any acquisitions. Actually, in all truth, I don't think so. But generally, the legacy, the traditional rules still apply, that there is still equity in that company, even if the token holders are not tied to that equity, right? So the question remains, if I went in and bought a certain company that was built on the blockchain, likely it would affect the price of the tokens, but I wouldn't, unless there was some agreement in their bylaws, traditional stuff, that I would have to actually own some percentage of tokens. It wouldn't matter. It would just, traditional rules versus the crypto. And there are some cases where some of the blockchain companies have very large stakeholders, right, where more than half of the tokens are owned by one group or one party, right? So there's some of that a little bit weird in there anyway, but yeah. So
That's probably still to be determined.
Yeah.
I bet,
yeah.
as we learn this industry and that actually starts to happen. I mean, obviously it'll happen, has to.
I think that'll be a hurdle with the security exchange.
Yeah.
Mm-hmm.
Yeah, like what's the value you're getting out of writing that check, right? To buy it. Yeah. Sorry, you can ask him directly though. He'll
Yeah,
answer the
I'll
question
touch it.
afterwards. So, Joe, thanks for being here. Appreciate it.